Shares of Micron are dropping in the after hours after the company reported their Q3 earnings. I'm seeing a drop about 8%. We'll get over to the technical chart here very soon. Talk about if this is a company that continues to pull back in price. Can you step in here and buy? And do you want to step in here and buy? We'll have to look at it fundamentally as well. We'll take a look at the Q3 numbers. We'll also take a look at the Q4 outlook as well, which came in, maybe according to some analysts, a little bit soft based on where the expectations were. We'll talk about one of this company's leading growth drivers as we head into next calendar year, and that is high bandwidth memory. What is high bandwidth memory, you ask? We'll talk about that. Certainly going to be a big growth driver for the company in the AI space. And then we'll come over here and look at this fundamentally. Take a look at how we've transformed the financials of this company just over the last year, and even quarter over quarter heading in a very strong direction. Speaking of strong, the valuation on this one, over 133 times forward earnings. I tell you what, they better deliver results, and when they come up just a little bit short, we do see Wall Street punishing the company, at least in the after hours. Now, revenue came in the Q3 at $6.81 billion. That beat expectations, which were closer to about $6.7 billion, but that doesn't give you the full story. The Q4 outlook came in at $7.6 billion, plus or minus $200 million. So you're getting to the upside closer to about $7.8, $7.9 billion. The consensus was for about 7.58 or about $7.6 billion. I saw a lot of analysts expecting a number actually on a guide closer to 8. That's still going to be 89% growth going forward. And certainly with the elevated multiple that they have on their earnings, you better continue to grow at a strong growth rate. And we're expected to grow at near triple digits or just under triple digits really for the next 2 quarters. And then you're going to flatten out or kind of smooth out to 40 and 50% growth as you lap these bigger numbers. And a lot of that has to do with the fact that you're having a huge trend in AI and certainly the data center as well. We'll talk about on device here with high bandwidth memory. And so what high bandwidth memory is, it's if you look at any of these high-end AI chips made by NVIDIA, certainly also AMD, Intel, you have the logic chips usually in the middle, and then surrounding that is the high bandwidth memory. And these things are capable and required to run a lot of the inference and certainly the training, absolutely the training of these large language model. Without this high bandwidth memory innovation, you probably wouldn't even have the innovations that you've seen from NVIDIA. You've got SK Hynix certainly being a big time player in high bandwidth memory, Micron coming on strong. You also have Samsung as well, who's had troubles getting their product on some of these bill of materials. But Micron is expecting billions of dollars of high bandwidth memory sales through 2025. If SK Hynix, I think, is sold out through next year, you've only got hundreds of millions of dollars in revenue really over the past 12 months. So as long as the AI trend continues to hum along, well, Micron's got a tailwind there. And I don't think there's any reason to expect it to not do that, because if you think about it, our lives are just surrounded by more and more data, and these training models and all the types of large language model development that's going on needs more and more data. Eventually they're going to be doing videos and audios and multi-trillion-dollar parameter type things. And now you're moving on device as well. We saw Apple several weeks ago announce different types of on-device AI processing. That's going to create tailwind demand for more and more memory. And obviously Micron being one of the leaders and one of the premier manufacturers of memory, well, certainly going to benefit them. Now, speaking of benefiting, look at your revenue coming in at $6.81 billion. Again, that was 81%, 82% growth year over year. Whereas last year, look at, you had negative margins. They were basically giving away the memory for free. And that is why they put the second quarter in here to show you even quarter over quarter, you're seeing really a lot of strength with this company. 5.8 up to $6.8 billion. Look at your gross margins from $1 billion all the way up to $1.8 billion. What's exciting about this company is a lot of this revenue growth is going to flow all the way down to operating profit. That's because your research and development fees, they've more or less kind of flattened out. Even when you have negative margins, they're not far from when you grow your revenues by 80%. Here's even more exciting. Your SG&A, or your selling general administrative costs, year over year, again, I told you, they grew their revenue 81% over the last year, but look at this. They barely had to spend more on selling general administrative, from 219 all the way to 291. That's going to flow a lot of money down to operating income. Last year, you lost $1.7 billion. I'm shocked this stock over the last year is up just 117%. I can't believe I just said that. But these type of improvements year over year, obviously getting priced into the stock, even quarter over quarter. Look at this, from 191 to 719. And this is something that has just turned the corner, because look at this. We get a 9-month view. The first quarter must have been terrible over at Micron, because look, even for the full year, despite 2 quarters in a row where you're doing 191 and then you're up to 719, you've still lost operating profit side $218 million. So these last 2 quarters are fantastic. And what Wall Street is more or less pricing in right now is these next couple of quarters, plus or minus something on the guidance side, they're going to be great. And they're going to flow a lot of profits and revenues down to the bottom line of this company. Now, from the balance sheet perspective, this company is not just a chip designer, man. They design these things and they're manufacturing. This is a combination of kind of an old school chip company that used to design and manufacture. This company is doing some manufacturing, as you see, their property, plant, and equipment balance sheet line to the tune of $38 billion. You'll see that when we get to cash flows as well. So they're not as great as you see, certainly with like an NVIDIA, but also like an AMD as well. Cash and cash equivalents, company actually has done a really nice job. They have a fair amount of cash, and I was actually surprised. This is a company we haven't looked at maybe in a while. I was surprised. They don't have a ton of long-term debt, certainly compared to cash, certainly compared to the amount of property, plant, and equipment they have, also the outlook going forward. Really, really clean. Now, unfortunately, their cash flows is kind of split here. We get a 9-month view on the cash flows. We pull down a negative net income number. I mean, things have really turned around over the last 2 quarters for Micron. Now, given that they're a manufacturer, they're going to have a lot of depreciation, amortization. That's their big add back on their cash flows. And look at this. Over the last 9 months, $5.1 billion of operating cash flow. Last year was only, and I say only, $1.3 billion. And it's only because, again, this is a manufacturer, okay? They're involved in that CHIPS Act. I think they've got a plant in Idaho and I think New York City, at least here in the United States. They've obviously got a big presence in Taiwan as well. $1.3 billion of cash flow last year on a 9-month basis. Not going to cut it when you had to spend $6.2 billion on your property, plant, and equipment. That's leveled out or normalized, maybe you could say, over the last year to 5.2, but it still exceeds our operating cash flow. So this is kind of the risk going forward, that you get a little bit of slowdown here, or SK Hynix or Samsung, or maybe even a fourth memory maker. There's not really, I don't think, 4, but they capture all the business, or the margins compress, and you're not able to capture all this in operating cash flows. That really exceeds kind of the investment that you have to do in terms of the fabrication facilities. So they're not generating a lot of what I would call free cash flow, which is operating cash flow minus kind of these capital expenditures. In fact, we're still negative, but again, the market is more or less kind of pricing in this growth going forward, and they're looking at what we've seen over the last 2 quarters, and they're assuming our research and development is not going to go up by a whole bunch, our SG&A certainly not going to go up by a whole bunch, and we're going to be able to maintain those margins because SK Hynix is basically sold out, and Samsung is basically kind of falling on themselves, and they can't get their high bandwidth memory product working, and so Micron is going to step in there and deliver a lot of that business. They're still able to pay off some debt, and over the last year, they burned through about $1 billion. And again, if things maintain themselves, and it's a big if for some people think this AI is in a bubble. And certainly if you think that, well, Micron is absolutely not the stock for you. But if you believe this AI trend, if you're believing in NVIDIA, well, then you should be able to believe in Micron as well, as they're basically well on their path to that trend. Now, I was actually surprised when I look at this stock chart. We're on a weekly chart for Micron, and we're going back to 2008. Some of you guys weren't even investing back in 2008, and I was surprised. This stock is channeling absolutely beautifully. Now, we've just set up kind of at the top of the channel. I think we're in a position where this will be viewed as maybe one of these tops that we've made more recently, and we're pulling out for a pullback for Micron. And I think we'll have one maybe right around the $100 level. Would be exciting for Micron. And you might be saying, well, that's crazy. Well, in the after hours, We're trading at 131. These stocks like Micron and Nvidia have just simply been going up over the last year. I think we see higher volatility, that volatility not just to the upside, but to the downside as well. You get a $100 price level on Micron. That's probably the first level where I'd be excited. It'd be an area of support, at least from a technical perspective. You get a further pullback in this one. You're certainly going to have some really, really bad news. It's going to be much harder to pull the trigger. You get down to like 70 or 80 bucks. You shave off about half the price on this one, but that also obviously a buying opportunity as, again, this long-term trend. There's been a lot of bumps and starts and stops in the memory business over the past 15, 16 years or so. This company seems to always be able to come out on top. I think this AI trend and the trend for more and more memory on device in the data center, certainly on these AI GPUs as well, I don't think that's slowing down anytime soon. And certainly a company like Micron is going to capture a lot of that business. And fundamentally, they've done a very nice job with controlling their costs on R&D and SG&A, would give me the confidence on a further pullback to pull the trigger on Micron. Hopefully you guys enjoyed today's video. We'll be back again, I think Nike's tomorrow and then Friday as well. Good luck with your investments.